Okay, this video is going to go over how you can make money on prediction markets, whether Polymarket or Kalshi. If you don't know me, my name is Cameron and I make a full-time income on Polymarket. I used to do drop shipping. I ran a high-ticket e-commerce store, which I later exited, and then I built a software, which I later exited, and now I am on to Polymarket, and I'm glad I am, and I wish I found it earlier because this is truly something special. This feels like drop shipping in 2017, if you knew what that was. But we're going to go over the whole 9 yards for this, and it's going to be very helpful to some of you who are just starting out. So how to make money on Polymarket. So there's two options, Kalshi or Polymarket. So Kalshi has trading fees and it has less volume. Polymarket, there's no trading fees and there's more volume. So Polymarket currently is better. Let's look at these two same markets from both of these different platforms. You see 9 million in volume and then 43 million in volume. 2 million, 7 million. 43,000 and 25 million. So clearly Polymarket has more volume and there's no trading fees. So right now, this could change, but right now Polymarket is currently better. So if you're watching this months after I upload it, it could be different. I don't know, but right now Polymarket is better. So how Polymarket actually works. We're going basic. We're going broad. So what you're buying on Polymarket is yes shares or no shares. So right now in this example, you could buy a yes share, one yes share for 21 cents, or you could buy one no share for 80 cents. In other words, 21% chance that yes happens or 80% chance that no happens. Okay, that's what that is saying. And it resolves to $1 if it's the winner and resolves to nothing if it's the loser. So for example, in this example, Maduro out by December 31st. You could buy yes for 8 cents. And if you're right, if Maduro is out of Venezuela by the end of the year, that 8 cents per share goes to $1 per share. So you're going to make more than a 10x just like that. So that's how that works. So what are the best categories to trade in? First off, sports. No. Okay, it's gambling. Okay, we're not here to sports gamble. We're not here to bet on Hail Marys. Okay, don't do sports. Although you can make money in sports markets with different strategies. Like I have a bot that can make me money in sports markets. But overall, don't do sports. Okay, you're just losing money for the most part. And also mentions markets. Sorry, I know some people will hate me for this. I do think it is mostly gambling. And the reason why it's mostly and not 100% gambling is you can make educated decisions on if something is undervalued because there are tools to look at past press conferences, past speeches to see how many times Trump said a certain word. If you don't know what mentions markets are, there could be a market saying, oh, what will Trump say in November? Will he say turkey? Will he say tariff? Will he say Christmas? You know, whatever. That's what mentions markets are. So you're sort of just like hoping someone says something. I don't like to enter markets like these, although at the start of my Polymarket journey, you know, occasionally you got to throw some of these in here just to have fun a little bit, but it's not ideal. It's really not. But there are tools to make a lot more educated decisions with that. But any of these markets can be gambling if you have poor strategies and or bad risk management. Okay, so even if you're trading in politics or trading in tech or whatever, if you have bad strategies and bad risk management, it's gambling. Okay, it's the same thing with day trading. You know, a lot of times day traders get bad reps because, you know, they're like, oh, day trading is gambling, but it's not gambling if you know what you're doing, okay? It's really not, but similar to Polymarket. My bread and butter, what I like, it's politics, geopolitics, so like elections and tech, culture, and world. That's what I love. That's what makes me my most money. And it's perfect because I love learning about that stuff, researching about that stuff, so it doesn't feel like work to me. It feels like I'm just scrolling Twitter, and, you know, I love it. But most importantly, only trade in markets where you can gain an edge. Edge is the big important word here, okay? Pause, but it is. If you don't have an edge, then you're gambling, okay, over time. Edge is very important. So how do people actually make money with edges? Well, faster news reactions. So whether you have a notification bot, Bloomberg Terminal, which is very expensive, TweetDeck, which is Twitter Pro, which basically you can see all the people you're following and see when they post and see, oh, something happened, and be the very first one to know when something happens. Another option is mispriced markets. So early panic, slow reaction to news, or an overreaction to headlines. Because a lot of times people see something, a headline, I'm like, oh my gosh, it's happening. And then there's an overreaction. So another option is arbitrage, which is where we start to get into actual strategies. Arbitrage is where you buy an equal amount of shares on both sides, both yes and no, and the total equals less than $1. I know this sounds confusing if you're a very beginner. I get it. Relax. You're going to learn these terms, okay? Let me show you an example of arbitrage. You buy 10 yes shares at 35 cents and 10 no shares at 60 cents. You will be guaranteed profit no matter the outcome. Why? Well, 35 cents plus 60 cents equals 95 cents. So for each share that you have, you will get 5 cents profit because we know the outcome resolves to $1. So let's say you bought 10 shares at 40 cents and 10 shares at 60 cents for the different sides. You will break even because 40 plus 60 equals $1, 100. So you will break even. On the flip side, let's say you buy 10 shares at 45 cents and 10 shares at 65 cents. What is that, like $1.10? You're going to lose money no matter the outcome. So arbitrage is where both sides equal less than $1. Okay. So strategies 101. Strategy 1, which is a very good one for beginners, very good one for anyone. Nothing ever happens. Okay. This is a strategy where you take no on everything. You choose no. No. Will the United States invade Venezuela? No. Will this happen? No. Will this happen? No. Why? Because nothing ever happens. That's just the truth. Nothing ever happens. Okay, once you're in this space for a little bit, once you're in politics for a little bit, once you're in polymarket for a little bit, you will learn that nothing ever happens. Or at least if it does happen, it's not till a long time away. Okay. Strategy 2 is you could be a market maker and bid across the spread. What I mean by that is, let's say this example up here. You could be a market maker and bid. Instead of buying it right now for 21 cents, you could place a limit order for 20 cents or 19 cents. And you can go across the spread to get in at a better price. Because right now, someone is trying to sell this 21 cent share. If you place a limit order for 20 cents, 19 cents, then someone might try and sell their shares for that price if it's the best option. But anyways, that's what a market maker is. And you can combine that with arbitrage. We're getting very complex. You can combine that with arbitrage. So right now it's 21 cents and 80 cents, which is $1.01. So if you bought shares on both sides, you're going to lose 1 cent per share. Okay. But if you buy, let's say yes at 19 cents and no at 80 cents, then all of a sudden your total share cost is 99 cents. So you're going to make 1 cent per share. That's arbitrage in combination with market making. Limit order spread. Bang. Okay. Reward farming, strategy 3. I don't do this. Some people do it. Strategy 4, be faster than everyone else, low latency. Whether you're using a bot, if you're using a bot, you need low latency. You need to have a German VPS near the POLYMARKET servers. Strategy 5 is bonding. So this means you place a bid and order at 99 cents or 99.9 cents, something that has already happened or is guaranteed to happen. So you're risking a lot and you're going to make a little bit, but that little bit you make is guaranteed. Okay, that's what bonding is. But the issue is if you lose one time when you try and bond, then you're going to lose big. So second option is to reverse bond. So instead of placing trades at 99 cents, you're placing trades at 1 cent. Odds are that 1 cent trade is not going to hit. But if it hits one time out of the 100, then you break even. If it hits 2 times out of the 100, then you double your money over time. Because odds are you're going to place trades for 1 cent. It's not going to hit. 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 You're losing 1 cent shares. Not going to hit. Not going to hit. Not going to hit. Then eventually, boom, it hits. That's what reverse bonding is, placing trades at 1 cent. I'm not going to tell you which one is better. These strategies, I'd only recommend strategy 5 if you have a lot of money. If you don't do strategy 6. Do some actual other strategies. I'm not going to tell you which one's better though, but strategy 5 is better. Okay. Strategy 7 is to copy trade a successful trader. Now, I could go on all day about strategies and different things, and there are more strategies that people think about and find out week after week. But this is the basics. This is just like a little blueprint. So copy trade a successful trader, and you'd be like, okay, well, where can I find a successful trader? Well, I have a list that you can find in my Discord of the most long-term profitable traders. Long-term is very important here because profitability just based on a number amount could be a bad move for you. Why? Well, someone could make $1 million in one trade and you think they're the smartest person ever, but no, they just deposited a lot of money at the start of their accounts and they're not the smartest. But if you copy trade and look at someone who is very profitable long term with a bunch of different trades, then that's what you need to look at. And overall, I wouldn't necessarily recommend copy trading. Why? Because you're getting in at a worse price and selling at a worse price. For example, if you're copy trading from someone who places a bid at 50 cents, all of a sudden, if you try and copy trade them, that price is now at 55 cents. And if they sell at 80 cents, you are now selling at 75 cents, for example. And so I wouldn't necessarily recommend it. It can be profitable, especially if you're fast. But what I would do is I would look at this list in my Discord and try and understand their activities, try and understand what markets they are trading in, try and understand when they decide to buy and when they decide to sell based on the news and the information that is happening at that time. Discord's in the description. We got a community of a bunch of different polymarket traders making money, talking about news, whatever. Go join that. It's free. So here's an example of a mispriced market. So we have this market called Another Critical Cloudflare Incident by December 31st. Right now it's December 14th, and there are 17 days until the end of the year. So we're going to do some math, okay? Bear with me. I know you guys don't like math. Bear with me, okay? So based on historical data, Cloudflare is statistically 63% likely to experience another major incident before the end of the year. How do I know 63%? Well, watch. Okay, patience, watch. Year to date, there have been 13 critical incidents. Okay? And you see at the end of the year, Q4, they have an incident every month. Some multiple, okay? 13 critical incidents, which is, if you do the math, 0.037 incidents per day. And there's 17 days remaining in December, which means the expected number of additional incidences is 63%, which implies a 63% chance that there's at least one more major incident. But the poly market is only trading at 11%, okay? Super undervalued, super cheap. I'm not telling you this is going to resolve yes, because there's 17 days left, so the time's coming up. We need another major incident if this wants to resolve yes. But right now it's at 11%, and it should be at 50%. It should be at 63%. Okay, it should be a lot higher, but it is severely undervalued. And so if you enter markets over time like this, which are severely undervalued, then you will make money and you will be profitable. Okay, I found this you're just doing math. Okay, that's how you find a mispriced market in some scenarios for quantitative markets like this. Okay, severely undervalued. Is it going to resolve? Yes. Truthfully, I don't know. Cloudflare probably put a lot of resources into fixing their infrastructure after all of these incidences, but I don't know. Statistically, there should be another incident higher than this 11% chance, okay? Which means it's undervalued, which means you should get in. Although, not financial advice, don't get in, because when it resolves no, don't blame me, okay? Whatever. Okay, risk management. This is the most important thing, and it's also the most overlooked, okay? You could enter a mispriced market. You could, know which category to trade in, whatever. If your risk management sucks, throw everything else out the water. You're not going to be successful, okay? This is the most important thing, or else you're going to have days like this where you lose a lot of money like me, okay? It's not nice to lose $10,000, but look, in order to lose $10,000, that's a blessing in disguise because you have $10,000 to lose. So you got to be grateful, you know what I mean? But risk management, it's similar to day trading, okay? Never go all in, okay? Position sizing is very important. That's what risk management basically is, because you don't really have a stop loss like day trading. So position sizing depends on a lot of variables. Depends on the confidence of the market, depends on the volume of the market, depends on time till expiry of the market, depends on so many different factors. So overall, position sizing, I don't have one strict answer for you, but less is more. So whether that means 1% of your portfolio per trade, or 5% or 10%, but overall, less is more. Okay. The only issue is if you're in 100 trades, each with 1% of your portfolio, then it's going to be hard to manage 100 different markets and with all news and information coming in. So I don't do 1%. I'm a lot higher than 1%, whether that means 5% or 10%. I don't know. I guess you got to figure that out. But position sizing is very important, okay? And don't revenge trade. You may lose like this. You may lose one day and you're like, oh crap, I need to make this back. And you're like mad and whatever. Don't revenge trade. Just turn off your computer and call it a day, okay? You're going to have ups, you're going to have downs. But overall, as long as you enter markets that are undervalued over time, you will make a lot of money. Okay, what I would recommend for you guys is to watch a full video related to risk management for day trading and apply the same fundamentals to Polymarket, because it's the same thing except you're not trading NASDAQ and you're not trading Forex and whatever. But as long as you pay attention to the position sizing and the actual fundamentals of it, it will apply to Polymarket. This is a picture that I found on Google. Thank you, Google. It's very funny. I know. Ha ha ha. This is Degen Gambling on the left. Okay, this is all of you guys if you don't know what you're doing. Okay, this is going all in on something because you can make a lot of money. Oh, go all in. Oh, no. Okay, don't be dumb. Don't be retarded. Okay, this is me right here in the hoodie. You already know, in the hoodie. Okay, boring, but it's profitable. Okay. Like doing all this, I'm in the Cloudflare market because the analysis of the days suggests a 63% likelihood, but the current probability is only 11%. Like, it's a little boring, okay, doing this, but that's how you become profitable, okay? And everyone else is people who don't know about Polymarket, but hopefully this video was helpful. A little bit basic about Polymarket and prediction markets. Join my Discord, though. It's in the description. If you want to join Polymarket, links are also in the description. But join my Discord. It's very helpful. We're just friendly in there. It's a free little Discord. Why not join it? But if you guys want to see any other specific videos related to Polymarket, prediction markets, or whatever, just let me know, okay? Okay, have a good one, y'all.